Good morning, good afternoon, and welcome to the latest of OEG's webinars. I counted this morning, I think this is the 35th day that we've been doing this, so given that we do them twice a day, I think we're up to about 70 webinars. So if you've been joining us from the beginning, thank you very much, and nice to have you with us again today. Today we're going to be looking at airline earnings and what's happening in the on the airline side of the business. We obviously focus on different things each time if we can, though generally looking at the whole industry. But with the third quarter earnings out for many airlines in the last little while, we're going to be having a look at that in particular. The summer quarter is obviously always really important for airlines, and so it's really timely to take a look at the state of the airlines at the moment. So we're going to be looking at some of the airlines that have released their results so far. We know that not all of them are in yet, but we've got a selection here. We'll look at how things like the high cost of fuel, the exchange rates and the resourcing issues are still affecting the airlines. And I know this is a topic we've talked about plenty of times before. Going to look at the difference perhaps a bit between capacity growth and financial performance. And towards the end, what are the prospects for 2023 as we get towards the end of 2022? And we'll take questions and answers throughout the webinar, as we always do. So do use the chat function, send your questions in, and we'll try and answer those and weave the answers into our discussion as we go. I'm really excited today. We've got two guests with us, one who's been with us before and one for the first time. Sid Nakhedi from Ishka Finance, welcome back. I know you've joined us in the past, so thanks for coming again. And Sid has got plenty of experience of airline finance, so he brings lots of expertise to the discussion today. So thanks for joining us, Sid.
Yep.
Are you there? I think you're there, Sid. And then we've got Thomas Jaeger, who's the founder and CEO of CH Aviation, new to our webinars. Thanks very much for joining us, Thomas. And I know that I think we saw something you'd posted last week and thought, oh, actually, you'd be really good to bring into this discussion today. So thanks for joining us. And always, as always, we've got John Grant, who's Chief Analyst at OEG, who has lots to talk about the industry. So that's our panel for today. Let's dive in and make a start. John, we always start with you with these sort of charts, just showing where the industry's at, how it's been growing these last few weeks. We update them for the webinar so that we can see exactly where we are in terms of capacity, at least. Do you want to talk us through these?
Yeah. So I'll talk through these for the 71st time then, shall I?
Please do.
So these are the regular sort of introductory slides that sort of give us context, background to what's happening at the moment. And as we head into the winter season, we're now at about 93 million seats per week, which is a pretty strong recovery on where we were this time last year, but still short of the 2019 levels. One of the things that I think is reassuring is that in many markets, the high capacity volatility we were seeing where airlines were changing schedules at short notice has disappeared, and there's a much more stable trading environment for most parts of the world. The one exception, of course, being China, where they have like Disney-esque lockdowns every couple of days in different cities, just to make sure all the population are still awake and moving around the country trying to avoid lockdowns. But it's a really good picture for many parts of the world. We now have some of the smaller regions that really are firing well ahead of previous years. Central Asia plus 25%, lots going on there. West Africa is another one where we're seeing solid growth against the pre-pandemic levels, and the upper half of South America is also performing very well, and Colombia in particular has been doing really, really well in the last 6 or 7 months. So it's getting good, but it's the big three markets, the big three regional markets in the world that really are going to get us across and above 2019 levels at some point if we ever do. So it's North America, it's Northeast Asia, which is China, Japan and South Korea. And Japan, of course, is now reopened for visitors without any travel restrictions. and they're already beginning to see a return and a recovery taking place. And then, of course, finally, Western Europe, where many of the major legacy airlines are still at capacity points that are about 15% below pre-pandemic levels, and probably not likely to get much above 90 or 93% of their capacity throughout 2023. And then, of course, the low-cost carriers in Europe who, Ryanair, are just so strong in terms of capacity growth, where they are compared to 2019, their network, aircraft orders, their profitability on Monday, their whole business operation is just, performing really strongly at the moment. So generally, it's good news for all of us. And if we could individually sort out the China problem, then the industry would be heading back towards more normal times. And in some ways, as we'll discuss later, being short on capacity compared to 2019 is actually quite good for the industry. We're seeing a much more sensible approach to capacity planning, and subsequently the impact it's having on profitability.
So to what extent, John, do you think that we talked earlier in the week about a sort of a discipline about capacity that we rarely see in the industry, but is that actually, is it a discipline about capacity, or is it just driven by the lack of resources and the airlines don't have any option but to just hold back a bit on the capacity?
Yeah. Well, I know you love the concept of discipline, Becca, but it's it really is. It's a bit of a hidden benefit for the airlines. However you look at this, some airports have got capacity constraints. It's difficult to get resources, and not just human beings, but actually spare parts and all the necessary equipment you need to operate in some cases. And that means that the capacity is being slightly constrained for everyone, and that's good. And airlines, of course, are able to then direct the pressure about there not being enough capacity at peak moments and higher airfares to the supply chain and other parts of the supply chain rather than themselves. So it's a bit of a soft win for the airlines themselves. But if we're at this point now, let's not forget we have 2.5 years of huge losses and loans to repay and recover. So having 12 or 18 months of sensible capacity and profitability for the whole industry would be a very sensible and disciplined step for us to be taking.
Yeah, Sid, Thomas, do you have anything to add to that?
Yeah, on my side, I think
I think you
Sid first.
Yeah, so I was saying, as John said, it's about demand and supply, and because of the past 2 years, people haven't been able to travel. We've seen a significant pent-up demand building up, and because of the restrictions easing across most regions now, even in Asia Pacific, we've seen that unleashing. And being in that situation, if you combine that with some of the challenges airlines have had with supply, that's one of the key factors behind the strong results that airlines have experienced in the third quarter. So, and we'll see that in the upcoming slides. But yeah, it's definitely positive in terms of traffic and capacity returning.
Thomas, did you want to add anything at this point?
I mean, since we were mostly talking about China, I think one thing that needs to be taken into consideration as well, if you look at the Asian markets, is that obviously they have been slower to recover than Europe because travel restrictions were lifted later. So the supply chain issues that existed in Europe before are now hitting in Asia as well, not necessarily on the HR side of things, but predominantly with maintenance, repair, overhaul capacity, with spare parts and so on. So when you look at the carriers located around China, I'm not so sure if it would be a blessing or an operational headache if China would completely reopen tomorrow, because a lot of them don't have the capacity to kind of deal with the demand that they have outside of China right now. So if China were to reopen tomorrow miraculously, these issues that they have with getting aircraft back into the air might actually create even more of a supply problem than already exists. Obviously, it wouldn't be nice from the perspective that you'll be able to put the assets that you have to use even more profitably, but it will create even more of an issue that the supply would be short. So if you look at carriers like AirAsia, for example, in Southeast Asia, they're trying to put aircraft back in the air, but there's only so many a month that they're going to be able to get up into the air again. And if China would reopen tomorrow, there will probably not be enough capacity to be redeployed immediately to deal with the pent-up demand that you would see there as well.
That's interesting, because we've talked earlier in the year, haven't we, about China actually perhaps potentially being better placed because they didn't furlough staff. They weren't going to have the same issues of bringing staff back on that we'd seen in Europe. But that was a discussion we had a while ago. So that's an interesting observation, Thomas.
It's interesting, Becca, that this time last year, I think the Australian Airline Association was saying to the Australian government, we need 6 months notice to get ourselves, ready and fit for purpose to restart. And I don't think because of consumer and popular pressure, I don't think there is a government in the world that has ever said we're going to reopen in 6 months time. It's almost like an overnight decision, and the pressure that puts on the whole industry is just it cannot cope. And it's not coped anywhere, and it certainly will not cope if that was to happen in China. So we need a controlled opening, and maybe in China that's where you will see that happen.
Okay, that's
in a sense that.
Thomas, go ahead.
I mean, in a sense, we're already seeing a little bit of a policy change in China, because if you look at the number of new routes that were being launched the last 2 weeks since the winter schedule kicked in, and if you look at the capacity increases that have happened on international flights, there has been a bit of a policy change, because all of the big 3 carriers that were previously typically more or less flying weekly frequencies on their international flights into China have increased them from the beginning of November. And so that must have been a concerted policy decision that they're going to increase these frequencies. Whether they are going to be able to fill the aircraft at the high fares that they are setting right now is a different question, but there has been a change of heart that they are trying to increase international capacity, even though the travel restrictions remain the same. But
yeah,
I think all of these things are always very concerted, and you see all carriers doing the same thing at the same time.
Yeah, we've had very mixed messages with people saying, oh, is China reopening? And no, it's not, but we're seeing capacity increase, as you say. Yeah. Let's move on, because we've only looked at one slide so far. So that's capacity. Quite often we spend quite a lot of time on capacity, but today we won't be. The 2 charts here are taken from OEG's traffic analyzer. So the data's up till August. So we've got August 2019 versus August 2022 here. And on the left, we can see how passengers have changed between those 2 months and how revenues have. And on the right, we've got average fares. And what we're seeing is, even where passenger numbers are down quite substantially on a market by market basis, revenues are up quite a lot, and average fares are up quite a bit. So this is as we build into looking at the airline financial results, isn't it? They're making more money.
Yeah, absolutely. And we've seen that in the results for Q2 for most of the major carriers that have reported. This is simple economics, isn't it? It's about supply and demand. And overlay that with the strength of the US dollar that has helped some carriers, and the yields are very good, and the price of fuel, of course, which is a component in all of this that has resulted in big increases in airfares.
We'd really like to ask the audience, if you're listening now, we have lots of anecdotal information about high fares. Do use the chat and let us know what's the highest fare you've paid this year for a flight. Where was it to and from, and how much were you paying? We're just really interested to see examples of some of those very high fares for people.
I think one of the things, Becca, that isn't included in here, which is an important aspect for many airlines, of course, is the growth in ancillary revenue streams.
Yeah.
And for many of the low-cost carriers, particularly in Western Europe, ancillary revenues are frequently as high, if not higher, than the actual passenger fares that are being taken at this moment in time. Airlines have become very good at e-commerce, at selling ancillaries, be it fast track, seat assignment, whatever it happens to be, excess baggage. It's a major contributor to an airline's bottom line. And sometimes when we look at the headline numbers, I think we need to think about who are the most adept and best in class at creating those ancillary streams.
And we know, don't we, that I think we've got a slide coming up a bit later about ancillary revenues, but there are some airlines for which 50% of the revenue is coming from ancillary revenues, isn't it?
Yeah, very much so.
So we've got thank you, Lionel. We've got an example here of a fare, Dublin, Dubai, 1,600 euros. Doesn't say what cabin class that was in, so.
I presume that must have been
like economy.
That's a fair bit for economy. Thank you very much. Do let us know if anybody else wants to share examples they've got. So we know the fares are up. Load factors. So these load factor numbers are taken from the published results from some of these airlines or airline groups. And what we're seeing here is load factors are, in many cases, close to or possibly even exceeding where they were back in 2019. So it's not just high fares, but the planes are pretty full again, aren't they?
Yeah, it's getting back to where we want to be, isn't it? These are pretty good load factors, 80, 84, 85% in many cases. So as you say, back to normal. Overlay that with the airfares and the fact that some of these big airline groups have hedged fuel at some pretty good prices for Q2, and it's looking pretty good, I think. It's a good position that the industry is finding itself in at this moment in time. And of course, this is all history. The most important thing is going to be what the next quarter looks like and the quarter beyond.
Yes, because obviously this was the quarter, the July, August, September, which is traditionally when the planes would be fullest anyway, when demand is highest. To what extent do we think some of this is about that mix of traffic, the leisure traveller moving up in terms of cabin, to premium economy or even a business class?
It seems to be a trend that we've seen and has spread. During COVID, and certainly in the US domestic market, some of the airlines noted that premium traffic had become more leisure orientated and people were booking further out in advance. And I think that's continuing. I personally think the sweet spot for the industry for the next couple of years is going to be the premium economy cabin, where profitability per passenger can be extremely high relative to the other cabins. Of course, the demise of first class on the transatlantic continues, and Emirates are putting more premium economy seats into the market. So that's where the action is going to be. And it's just, to Sid's earlier point, it's pent up demand, but how much more energy is there in that pent up demand? How much more cash is there to be splashed by people who want to visit friends and family, hit their bucket list, whatever it happens.
I think that's going to. Would you agree with John that we've got another couple of years of this trend of sort of high yielding leisure?
I think from. Go on, sorry, Coach.
I think it's not. I would disagree there. I don't think that's going to last forever, because I think a lot of that pent up demand it comes from the fact that people have saved money during COVID because they couldn't spend it on what they typically spend it on, and now they went on their first couple of trips again to go visit family, to go on vacation, whatever, and then said, and now this time around I'm going to splurge and I'm going to fly business class. And I have spoken to a lot of airline CEOs throughout the year, and all of them were telling me that they've never seen such high leisure demand in business class ever in their lives. And I think the question is how all of these different curves are going to play out. So how much longer is that boom going to stay here, where people are willing to spend that much to travel for leisure? How is business demand going to recover over the next couple of months? How are recession fears going to dampen consumer demand? And there's a lot of these curves at play, and it's very difficult to predict how all of these curves combined will actually work out. And I think that's the biggest challenge for the industry, because I remember one Washington Post article where a fellow journalist wrote something like, this is an industry that could tell with amazing precision what the demand is going to be on a Tuesday next April between DC and Chicago, and the industry can't really tell that anymore.
But you know, Thomas, I think part of what you said is right.
It's not a normal demand environment where you can look at history and say that's what it is.
Yeah, I think you're right about airline CEOs not having seen so much leisure demand or leisure patronage in the front of the aircraft. But I also think that's because their historic and their traditional revenue booking parameters prevented it from being there, because you know they priced so high in the last 6 weeks pre-travel that it was purely corporate demand that could afford those cabins and those seats. Now what we're seeing is, of course, much shorter booking profiles and shorter booking times, and we're seeing people, leisure passengers, being attracted because airlines still haven't managed to sell any of that premium cabin capacity, and suddenly the fares are slightly lower than they used to be.
And I think just to add to that quickly, I agree that with these inflationary concerns, whether that demand for the premium segment will exist, that's a major concern. But what we've also seen is corporate or business travelers moving into that premium economy. So that segment compared to the other two, I think there's still, I mean, in general, airlines are quite confident about that segment in particular going ahead.
Yeah. So we've had some interesting numbers in terms of fares. London Heathrow to Switzerland, £220, including baggage. Not so high, but it was 150 before the pandemic. Sydney to Gold Coast in school holidays, just over $1,000 Australian one way. And in India, apparently domestic fares have gone up a lot since September. So thank you all. Yeah. So anecdotally, you're seeing this phenomenon that we're reporting on here. So let's move on to some of the airline results. These are the US carriers. Is somebody speaking? Okay, let me carry on.
I was just going to say something on.
Go ahead, Thomas.
I was just going to add something on India, because someone said in India fares have gone up a lot since September. I think that's really driven by supply chain issues, because both Indigo and Go First have a crazy amount of aircraft, A320neo aircraft on the ground. So because of operational issues, and they can't get spare parts fast enough. So I think there's an artificial, not artificial, but there's an outside influence at play there that has massively taken out supply.
Yeah. Okay, thank you. So US carriers, we're looking here at the third quarter results. On the left hand side, we've got operating income, which is I guess a measure of profit, and on the right, not for all the carriers, we didn't have the same data, but revenue per passenger. So sort of similar trends with some healthy numbers here, aren't there?
Yeah,
I don't know, Richard, who wants to speak to it first? John?
Yeah, Thomas, by all means, if you want to go first.
I mean, the US market is again very similar in a sense to what I've just said about India, and there it's mainly driven by the fact that they don't have enough pilots. So there's a lot less supply in the market than there could be if they would have enough pilots to fly all of the airplanes that are sitting around. And you have cases like United having parked, I think by now around 20 to 30 one-year-old Embraer 175 aircraft in the desert because they don't have pilots to fly them. So that's again creating less supply than there should be, and that is obviously driving up fares in an environment that has always been very oligopolistic before already, where between many city pairs you only have 3 choices. And now you often have even less choices than that because there is just not enough supply to pick from, or flights are being cancelled because there is not enough pilots to fly the airplanes. So that's obviously driving up average fares, which is what you see on the right.
Yeah.
It's interesting. I mean, when you look at this, obviously the big 3 legacy carriers outperformed many of the others in the US market. But when you look and see what JetBlue and Spirit and where their operating incomes are, and the fact they're going to merge, you know, it's still really not going to move the needle for them, is it, in terms of position and performance, unless they can achieve some really significant synergies. That's a challenging merger to drive value for the shareholder, I think. Sid, what do you think?
I agree. I mean, there's other concerns or issues to overcome there as well, right? In terms of the fleet, JetBlue is kind of a premium or a hybrid airline, whereas Spirit is more on the lower cost segment. So that will be a challenging merger. But what we saw with the US is airlines which and they obviously the US market started recovering faster than other markets. So their Q2 results were quite strong as well to follow on to the Q3 results. But in the Q2, what we saw is airlines which had hedging policies, which in the case of US market, it's just 2 of them. They perform better, and full service carriers definitely on average were profitable, and that's a trend we saw continuing in Europe as well.
And what role has cargo and freight played in this? We've been talking about passenger traffic quite a bit so far, but you know, we've had a very strong period for cargo, but we are seeing cargo volumes coming down, aren't we? How's that going to affect the performance of the airlines going forward?
I think from the US market perspective, the cargo was less of a driver. Yes, their revenues were cargo revenues were up, but I think proportionally is the Asian carriers or the Middle Eastern carriers, which tend to have larger or dedicated cargo fleet, even Europe, Lufthansa. So those we've seen significant, like in Taiwan or Korea, their results have been completely unaffected during the pandemic, and that's entirely driven by cargo. So that there we'll see some impact. I think in the US, it's primarily passenger driven. So
yeah. So we've got similar.
Yeah, I mean, I agree. I agree with Sid on the split between the different regions. What I recently did, and which it's an exercise that Sid will probably criticize left, right, and center because he's a financial analyst. But I just looked at the 2021 annual results that were reported by all of the carriers in the world, and I adjusted the cargo volumes and the cargo rates back to pre-pandemic numbers. And then everything that was incredibly green in Korea, in Taiwan, Qatar Airways, Etihad, turns completely red if you take the pandemic cargo rates and volumes. So it was entirely driven by cargo and not by anything else.
Yeah,
that's quite sobering, isn't it? So we've got a similar chart here for some of the European carriers. We still don't have results for lots of the Asian carriers. So I know this webinar in the morning, we usually focus a bit more on Asia. I do want us to talk about it, but we don't have the same level of data for the Asian carriers. It's not quite such a clear positive picture, is it? Or is it as positive in Europe as we're seeing in the States?
No,
all
it's
the
not.
measures here are different, by the way, because we don't have, so on the right hand side we've explained what we're showing for each of these carriers, because they all report slightly differently. It's not like in the States where everybody's got a common sort of reporting format.
No, I think, Becca, what we're seeing here is to that point that, you know, every region of the world is at a different stage in its recovery. And if we were to position Europe as the center of, you know, the aviation industry, and we were the average, then we know North America is probably 5-6 months ahead of us. And that equally Asia, excluding China, is probably 6 months behind. So this is not unexpected. I think the advantageous position for North America, of course, is by virtue of being that 6 months ahead, they've had an even stronger Q2 financial quarter than the European carriers. And of course, the Asians are lagging. So we're going in Europe and in Asia into the IATA winter season with good results, but with less of a buffer for the headwinds that we might experience in the next 5 months through that winter season to the end of March, when the summer will begin to return. But notwithstanding that, you know, if you compare to 2021, everyone is in a much, or the majority of carriers are in a much better position than they were previously. And the ones who are not in a good position, you know, then clearly that's where the pressure is going to be for the next couple of months, and where I think there'll be a lot of interest about their ability to survive. None of these carriers are in that list, of course.
So we've talked over all the webinars we've done about you know, the potential for airlines to go out of business. We've seen much less of that than we'd expected. We've had a question in about consolidation. Should we expect consolidation of the market between any of these carriers? Is that still something we're looking at, or does that sort of come off the table more if they become returning to profitability, or does that become more likely?
It's interesting. I mean, you know, there's been discussion, rumor, speculation, hints about IAG being interested or in acquisitive mode. And there was the rumor about potentially EasyJet. That's far too big for them to bite off. I think at the moment, although you could see that it would be a really, really strong and interesting acquisition. And the other one in Europe, of course, that seems to be getting some attention is TAP Air Portugal, where the government wants to sell that off. But that's at the other end of the spectrum. It's, you know, it's relatively small. It's a very niche airline in many respects, strong position from Europe to Brazil, and a European network, but not a great European network. And then in Asia, of course, we're seeing the final throes of the Korean Asiana consolidation. Will there be more? Potentially, but you know, in Asia, we know most governments love their flag carrier, however unprofitable they may be.
Yeah. So we've got some questions coming in. Why would the main, this is from Matthew, thank you, Matthew. Why would the main 3 US carriers have share price dropped since March 2021, even though passengers' revenue profits have all increased?
I've no idea, and it staggers me as well. And it's exactly the same across the European airlines and their stock prices as well. It's about fashion, I think. It's about confidence, and it's about people worrying about, you know, getting their fingers burned again by a sudden downturn. All of the major airline stocks, I think, look probably good purchases at the moment, but I do flag that and say share prices and pension funds can go down as well as go up. So I'm not making a recommendation. But Thomas and Sid, what's your view? I mean, it does seem like they're underpriced.
I mean, if I jump in here, you're right. I think it seems quite contradictory that at a moment when fundamentally their positions are improving, and we've seen that, I think, compared to 2020, US carriers' financial positions are much stronger now. And I guess, I mean, the stock markets in general have have gone down across the world, and there's increasing macroeconomic concerns, so that is weighing in on investors' minds. So yes, the results this quarter have been strong, and I will discuss that going in the upcoming slides. But there are still challenges and headwinds on the horizon. So that might be, I think that's probably what's driving some of the share market behavior.
And Sid, we were talking earlier in the week, as the airlines start to make some money, you were saying that they've got quite different approaches to what to do with that. You know, some of them paying down debt, some of them choosing other things, not necessarily returning cash to shareholders. Is that, do you want to talk us through what you're seeing?
Yeah, it comes down to the fact that we're still in that fragile state. The recovery is happening, but there's still some challenges. So generally, airlines would want to keep cash on the balance sheet, and this is historically, compared to historic levels, this is way high. So investors would say that's not efficient use of capital. But I think considering the macro environment next year, it's prudent for airlines to maintain that cash. And I mean, because of the interest rate rise, I think many of them will also start benefiting and generating more interest on their cash. So generally, I think, and where possible, airlines have been paying back the debt that has been acquired over the past 2 years. So now is the time. They generated significant cash flows. And as we enter winter in the Northern Hemisphere, I think traditionally that's always been weak. So it's better to hold on to the cash reserves as we.
And are there many airlines still asking for more loans? I saw ITA in Italy was going back and asking the government for more funding this week. Is that something we're seeing across the board, or is that not happening?
Not across the board. But in certain markets, I think China, there is still obviously because of the situation over the past year, their airlines they need a capital injection. But elsewhere, I think it's a few cases here.
And Thomas, I think the comment we'd seen that one of your colleagues had made last week was about the state of the Chinese airlines. Do you want to say a bit more about where CH Aviation sees the state of the Chinese airlines at this point in time? We don't have the detailed numbers for them, but.
Well, I mean, all of these numbers always have to be taken with a bit of grain of salt, because there is very few airlines in China that are truly private and independent, and the ones that are, like Spring Airlines, are doing relatively well because they are in the low-cost carrier segment, and they have some of the highest aircraft utilizations that we are seeing in China right now compared to the more government-owned, controlled airlines. But I think the issue is relatively clear. I mean, the reason why they are struggling is that they have had a significantly higher number of constraints and significantly crazier demand swings than anywhere else, because as one of you said at the beginning, we're still seeing lockdowns every week, and they're moving from one place to the other, and that obviously has a crazy impact on demand, like we were used to it maybe a year and a half ago in Europe, where things like this happened. But this is still happening in China week by week, and it's hitting the bottom lines of these carriers, and they have been going through that for a much longer time than anyone else. So the result of that, the financial state of especially some of the smaller airlines, Shandong Airlines being one of them, for example, is really not great. And you have similar situations in Hong Kong, where Hong Kong Airlines is in a relatively difficult position financially because they haven't received that much government help. But I think it's really just driven by the fact that they have such an unpredictable market that they are dealing with still. But you see that across the world, and I think you said before that we have not seen as many airlines going out of business as we would have assumed, and that's mainly been driven by the fact that in many countries everyone got bailed out. I mean, in Europe, because they got both bailed out. The best two examples during COVID, they still failed. So it's typically bankruptcy season now from November, December for airlines, because you don't get that many advance bookings. And so we have seen over the last couple of days how even European airlines started issuing warnings that if they don't get capital, it's going to be a very difficult winter. So Flyr in Norway has done that officially and did a stock market filing. There were reports yesterday coming out of Belgium that Air Belgium needs a capital injection or they will not make it through the winter. So there is a lot of, I would say not the carriers we looked at in these slides here, but there's a lot of smaller to medium-sized carriers that will probably not get government bailouts again, and that are in a very difficult situation right now.
Although, as we've just said, ITA is clearly one that probably will get another bailout, and yet, you know, for probably 15 years has been a carrier that has never corrected its position, never really adjusted and got to grips with reality, and perhaps maybe now is the time that ITA or the former Alitalia ceases to operate. You know, is it just limping along like a wounded animal and actually does need to be put out of its misery?
I mean, I think this time around, when they relaunched again as ITA, they have cleaned up a lot more than they have cleaned up the last time they restarted again as Alitalia. I mean, they are used to that by now. They're doing a reset every couple of years. But I think the current ITA is set up to be a lot more healthy than the last iteration of Alitalia was. So I think generally the setup is healthier, but the underlying fundamental problem is the same that it has always been, which is that it doesn't necessarily make a lot of economical sense to run a worldwide hub and spoke carrier from a relatively weak hub, which is in Rome. And I think the entire Alitalia situation could have been resolved if many years ago someone would have had the courage to close down Milan Linate Airport and to say you cannot use it anymore, and they would have been able to run a hub and spoke operation in Malpensa, but they have forgotten, or that's a chance that has gone 20 years ago. And so it remains to be seen how you could run a global hub and spoke carrier out of Rome.
Yeah, I think it's a good observation. Those of us who've been in the industry long enough have seen that opportunity come and go. We've got a slide now with some data that Sid provided us with. Very interesting, Sid. Do you want to talk us through what we're seeing here?
Yeah. So this is just what we've done is aggregated some financial data for about 70 odd airlines and plotted that from before the pandemic, through the pandemic, and this year. So as you mentioned earlier, not all airlines have released their financial results for the third quarter yet, especially in Asia Pacific, but there have been a few. But what we've seen is of those that have reported, 64% were reported profits, and that's up from about 40% in Q2. So there's definitely an increase there, and you see those trends. On the left is operating margin or EBIT margin, and that's trending upwards, slowly returning to pre-pandemic level. And on the right is capital structure. So they all seem to be heading downwards, but bear in mind the Q3 data is preliminary. And Q3, as we mentioned earlier, it's coincides with the summer season, so it's strong anyway. And because there were no COVID regulations, that's kind of a big factor in that strong performance for the third quarter. We've seen a few airlines in Asia Pacific also return to profitability, so that's also encouraging. But China, again, it's been significant losses, and that's eroding their net worth. I guess the question is how sustainable it is. And as we look into the winter quarter, Ryanair, even though it had a record first half, or their first half, the September quarter, has also said that the second half will be loss-making. It'll still be less than the profit they've made, but the winter season is traditionally loss-making for airlines. So think it's positive that these lines are moving in the right direction, but I think there might be a bit more volatility, and especially with the macro situation, I think that there is some that'll be a major challenge, one of the major challenges for airlines in the next year.
Yeah.
So, since do you think it will be? Do you think that interest rates being as high as they are will also just make it harder for airlines to actually get capital if they have to get the capital on the open market as opposed to getting government help? Or is that not an issue for especially some of the smaller and medium-sized carriers that will have issues now getting funding to go through the winter?
Yeah, I mean, it'll be more expensive, definitely. That is at a time when margins are already will come under pressure, because I mean, we've not discussed this, but in the upcoming slide we'll talk about the strength of the dollar, and that's been a major headache for non-US airlines. So what we've done here is just plotted the dollar against major currencies, indexing it to November last year, and you can see that in most cases the dollar or the local currencies have weakened, and that's a major challenge for non-US airlines, because we know that a major portion of airline expenditure, fuel primarily, is in US dollar. So if the local currency goes down, that makes it more expensive for airlines to service the debt, or if it's in US dollar, or to service their expenses. So that's a major headwind, and we've seen airlines reporting significant FX losses in Southeast Asia, or even in Latin America, even though there's a bit more volatility there in terms of currency. So yeah, definitely, I think interest rates they will continue to trend upwards with inflation still being high, and that will have implications on the borrowing cost. But simultaneously, those airlines that are well positioned or who have cash reserves, they will benefit out of it as well.
I think a large part of this is going to be about risk, isn't it? And you know, if you are a small, medium-sized airline and you're going back into the market this winter for cash, when the rest of the industry is beginning to turn around and look a little bit more profitable, then the combination of higher interest rates, the fact that it's clearly a risk to a lender, means that you're going to be paying much higher rates than you were this time 2 or 3 years ago. And of course, there isn't a government to bail you out, or a loan scheme to bail you out in most cases, apart from Alitalia stroke ITA and the Italian government. So, you know, this really is a paradigm point. Those airlines that have weathered the storm and got through this and are trading reasonably well are in a good position. But finally, you know, we are likely to see, as Thomas says, this is the season for failure. And we will, unfortunately and inevitably, see some fail. That is part of the airline cycle we see every year, and had seen until 2019. There are always a couple of casualties between now and March in Europe and in other parts of the world. Sometimes they're big, sometimes they disappear and we don't even realize.
That brings us on to one of our favourite Ishka slides, which Sid has updated for us. We really like your vulnerability matrix, and I know it's not necessarily scientific, is it? But this sense of, you know, how vulnerable are some of the airlines, and what you've been able to do this time is add some arrows to say, you know, if they become more so or less so. Do you want to? I'm aware we've got about 10 minutes left, and we've got another topic we wanted to touch on. So. I think this is the last of our, actually no, it's the last of our finance sort of slides, but do you want to give us just a quick view of where you see things? There's some airlines that are perhaps the ones that are more vulnerable than they were.
Yeah. So this is something we started during the pandemic, and it's probably the end point of our analysis. So I mean, we look at the financials, we look at the qualitative factors, and based on that we arrive at this position. So it's financial risk versus government support. And so we've seen is obviously throughout the pandemic, there's been a lot of movement going from the bottom half of this stable matrix towards the top. So, I mean, we've seen, we talked about Shandong before, and even though some of the tier 1 carriers in China have been able to benefit from government support, or they have that implicit backing and have raised capital, we've not seen a lot of that flow through to the tier 2 airlines. So that has those losses have accumulated over time, and that's eroded their net worth. So that's the reason why we place them on the higher end of that risk table. But simultaneously, there have been positives as well. Like the Mexican Airlines, they've had a significantly positive year and a half, so their positions have improved. There's been some restructurings that have completed successfully, so their positions have recovered as well. Qatar Airways, we talked about earlier, who's benefited significantly from that cargo space. So yes, I think, and there's a lot of airlines there in the top right hand corner, and most of them happen to be in Southeast Asia. And we know that because for those airlines, the environment has remained challenging for a longer period, and it's only started to recover through the middle of this year. So I think there's still some, it'll take time for to undo some of those losses that have accrued over the past 2 years.
Yeah, very interesting.
But I think there's a significant correlation between what you have on the lower bar, where you say no explicit government support, because if you look at Southeast Asia, that's exactly one of the areas where, with the exception of Singapore Airlines, no one else has really received massive government support. I mean, yes, Thai and Garuda have gone through bankruptcy restructuring and successfully exited that, but no Thai carrier has gotten significant amounts of government bailout. They got a bit of tax reduction here and a bit here and a bit here, but it was very symbolic in comparison to the rest of the world, and that's why they are in such more dire financial situations right now, because they haven't really received any of the type of support that any of the European carriers or North American carriers would have received. Not anywhere close. Very symbolic gestures.
That was a general pattern you saw at the beginning of COVID and the pandemic, wasn't it? African carriers, African nations, Southeast Asian nations, Latin American nations and countries just didn't have the cash and couldn't support their national airlines. It has been a very polarizing event, the pandemic, in terms of those countries and those airlines with cash. And we've seen the division in the world between the rich and the poorer, and it's reflected in what we're seeing in the airline industry to a degree as well.
Yeah.
Yeah, I mean, if you look at Indonesia, for example, which is represented here by Garuda, which, as I said, went through bankruptcy restructuring. You have Lion Air that fared a bit better and that has been able to gain market. Sriwijaya just filed for during the pandemic, but then the third carrier in Indonesia, which is bankruptcy protection last week. So it's in these markets, we're going to feel the impacts of the pandemic a lot longer, because it will take them a lot longer to recover as well, and to get out of that hole, because there's been no support at all.
Yeah. Okay, we're going to change topics slightly. One of the questions we had, we had quite a lot of press queries at OAG a couple of weeks back when the results were coming in about how travel behavior was changing. And I think a couple of the American airlines had said, they're seeing quite a lot of change, and they were talking about it. One of the changes we were being asked about was there a flattening of demand through the months of the year, through the days of the week, and through the time of the day? We couldn't really see anything in the month of the year, because that's the beginning of this year was still too different, and things hadn't settled down. What we did see was a flattening by day of week, and on the right hand side you can see I've taken a week in the middle of October from 2016 through to 2022 and shown the proportion of capacity for 2 airlines at 2 of their hubs by day of week, and you can see the line, certainly the Saturday is the most significant change. We are seeing much more Saturday traffic than we would have seen before. So it does appear that the day of the week is becoming more even through the week, which I guess is good for airlines. It's good operationally. It makes for a more efficient operating structure. And I guess this is all about this, blended leisure travel, more leisure travel, perhaps a bit less business travel. Those sort of patterns coming together to make a more even spread of traffic through the week. We've got the same data for a bunch of other airports. This is just 2019, that same week in October versus 2022. And again, we're seeing Sao Paulo a bit more, perhaps more even structure through the week, and Lufthansa perhaps a little bit more, and also Iberia a little bit more. So a pattern that is perhaps being replicated all over the, oh, I'm sorry, we've just gone back, being replicated in many different places.
Also a function of available resource, I think, Becca, and capacity. So, where airlines perhaps are able to put a bit more capacity in on a Monday and a Tuesday for that corporate demand, it's just not there at the moment. So we're getting a more even pattern. I think it is partly that leisure factor, and obviously a more even, efficient use of your resources is better for the business. Mm-hmm. If it's long term, I wonder if we had all of the fleet and all of the resource back that we had in 2019, whether we would see the same pattern. Because after all, at some point, you've got to do your engineering and your line maintenance, and that's got to come in. I think the Qantas one at Sydney, I think is a bit quirky, and probably, as I said yesterday, relates to Melbourne, and one of the biggest domestic markets in the world, which capacity cuts back dramatically at weekends.
Yeah, so trying to pin down what's happening with leisure versus corporate travel patterns is proving quite tricky, isn't it? But there's lots of theories about what's happening and whether business travelers are extending their trips and adding leisure, or they may be staying in their leisure destination and working a day, but they call it work, but they're actually traveling back on a Tuesday instead of a Sunday night, and all sorts of things. Thomas, go ahead.
And I mean, I've heard, I don't know how many theories on that, but one theory that I heard from one of the major European carriers is that they said that they feel like video conferencing like we're doing it right now actually would make it easier for some executives to travel for longer periods of time, because they can still manage the business at home while they're away, and they try to pitch video conferencing as a positive for the airline industry, because it actually allows people to run stuff while they are visiting customers.
Sound like either an airline CEO or a corporate travel agent trying to wish for the best story and angle to what's happening, rather than someone who's living in reality.
Yeah, but that's what I meant, because you said there's many theories, and that's a theory that I heard from a C-level person at a big European airline. That shall remain.
Well, there you go. I think it goes back to what you were saying earlier, that it's just there's a lot of unpredictability, isn't there, at the moment, about what is actually happening in the market and which bit of demand is coming back and in what form.
Yeah, and how all of the curves are going to go.
9 o'clock. We've got a slide here which has got ancillary revenues. I think we'll probably end up talking about this more in the afternoon webinar, because we are running short of time now. But it's data taken from CarTrawler. They produce some great data about ancillary revenues, and it's always a surprise to me just how high they are. So finally, just impediments to recovery going into the next year. I think we've covered lots of these these factors. High fuel price, it's still going to be high. High costs across the board. Strong dollar. Availability of staff and supplies. We haven't talked about aircraft manufacturers struggling to fulfill aircraft orders. That actually, you were saying to me, John, you thought that would actually hamper the sort of network expansion that some of the airlines are looking for.
Well, yeah, I mean, Ryanair mentioned it on Monday and in their earnings report. They have 60 plus aircraft scheduled for delivery next year, and they actually said we don't think we're going to get them, or certainly not the number they think they do. They might. Being Ryanair, they might actually think that's a blessing in disguise, because they'll put a writ into and a lawsuit in and seek compensation. But that's a general issue for many airlines on terms of order books.
Does that count as ancillary revenues for Ryanair?
Well, it probably does count as ancillary revenues, yeah. I mean, but it's a it's a struggle for everyone, and it's not going to go away. The order books are full. They might be juggling between who's going to take what, where, and when, but it's going to frustrate some people. But equally, to that point we said right at the beginning, you know, that's quite helpful, really, at the end of the day, because if we control capacity, then we improve the probability of operating profits.
Okay. I think we're going to call it a day round about now. Sid, Thomas, do you have any final thoughts on how the industry is going to move into 2023? We've seen some quite positive numbers here and some positive trends, but there's still so many question marks, aren't there?
Well, I was just going to add a remark regarding the aircraft manufacturers and their delays in deliveries. So all three of you sit in the UK. Biggest carrier in the UK on the intercontinental market is British Airways. Their biggest joint venture partner is American Airlines. Both of them, in the middle of the pandemic, made the decision to retire lots of aircraft types. BA retired the 747s, American retired the 767s and the A330s. They are down significantly on their wide body capacity, because both of them assumed they were going to get deliveries from Boeing, and in BA's case to a lesser extent from Airbus, and the 787 delays have created a massive constraint there on capacity. They don't have anywhere close to as many aircraft as they assumed they would have by now, and we're talking about dozens of aircraft that they are short relative to pre-pandemic if you look at wide body fleets between American and British Airways. And I think that's definitely going to have a massive impact if that is not going to catch up really fast, really soon.
That's a good point.
Yeah, if I just quickly summarize, I think traffic is definitely recovering. So the first phase of it, which was getting rid of the restrictions and people coming back to flying, that's happening across the board. But as we look forward, I think macro factors will increasingly be, so from a financial risk perspective, that they will be a big factor in credit risk in the near term. And with all the issues that we talked about, I think repairing, or that ongoing process of repairing the balance sheets, that'll be a bit challenged. Some airlines are well positioned, others there's still some pressures.
John, any final thoughts for us?
As always, Becca, you know, the industry always provides us with stories, data, and insights, and you know, I think the next 5 months will be challenging. This time last year,
we've been saying that for a while now.
Yeah, this time last year, I was going to say we thought it was going to be very challenging. So I think we are in a better space. But ironically, for most people, we're in a better space. But for one or two carriers and one or two markets, it's going to be a struggle to get through this winter. And only time will tell who that is going to be, and when it happens.
Okay. Great, thank you all very much. Thank you, Sid, Thomas, and John, for spending the last hour with us and sharing your insights. We'll be back this afternoon for a repeat of the webinar. The conversation will, I'm sure, go in slightly different directions, as it always does. So please join us this afternoon if you want to. We will be back for another webinar on December the 14th. So do put that in your diary, but if you're on the mailing list, you will be getting a reminder about that anyway. Thanks for joining us today, and maybe see you this afternoon. Bye then.
Thanks, bye-bye.
Thank you.